So the other side of this whole equation, we've kind of talked about moving this industry on chain, but what about moving the assets into crypto? Where are we with that? Because you're also involved in that whole thing as well. So where are you with all of that, with seeing what kind of demand is coming, what kind of products are needed? What's happening with the institutional investment with crypto?
So the hope is that the value of the token goes up because we want it to be an investment exposure. But in reality, the value of that token should go down as the volume grows because it's helping to drive volume.
Yeah,
So
it's
if
really
it goes
hard,
up
this
too
thing,
much,
because the more successful it is, the least attractive the block space is because of pricing. Um,
yes.
so it makes it really difficult. It'd be interesting to see how that resolves over time.
Hey guys, welcome to Everyday Finance. For Real Vision CEO Raoul Pal, August might not be an easy ride, but it could be setting the stage for the most powerful and explosive part of the year. Pal says that the recent correction in the market isn't a sign of weakness or the end of the rise. Instead, he sees it as the start of Phase 2 of the banana zone, which he thinks will last all month. During this stage, the market usually stays the same, or slows down just enough to make many traders and buyers think that the bullish momentum is over. Powell says that this stall is part of a bigger plan to get rid of the less patient players and raise doubts before the next surge rising stronger than the last one. He says that even though people may not feel optimistic or even negative during this break, it's not a breakdown but a building. The market is taking a breather before making a move that most people won't be ready for. Powell wants people to know that the calmness that seems to be there is actually just the last few days of peace before altcoins go through the roof and the market starts its fastest growth phase yet. Wait until the very end of the movie to see how he explains why this slowdown is not the end, but rather the beginning of what could be the most surprising and profitable part of the rally this year.
There's also, there's no secondary market liquidity in a lot of these things. And, at various points in the business cycle, people have got locked up in a VC fund or a private equity fund and they want to get liquidity. Yes, you can get some, but it's very illiquid. But, it's going to create that. But then that creates, I guess it creates an arbitrage between the NAV versus the tokens, which is good because it creates liquidity around the ecosystem. I can see a lot of that. The one that comes up a lot is the one that I'm least excited about. I thought I was excited about it, but I'm not, which is tokenizing real estate. And the reason
Yeah.
being is every person who comes up to me and said, can you help me with this? Is somebody who wants to sell real estate. I've not had a single friend or single person I know say, I'd love to tokenize a part of an apartment in Manhattan, because young people just don't want that exposure. It just doesn't make meaningful returns compared to the returns of the things that they prefer, tech stocks, crypto, stuff like that. So I don't know who the buyer of that would be.
Yeah, I think real estate, it always did seem like that would be the easiest and first place to go.
The
But
title deed,
I agree.
sure, all of the contracts and stuff for sure, but the actual real estate, I'm not so sure anymore.
We've actually looked into it a few different times over the past few years. And, there's problems. There's problems with the way that you do the valuations. There's problems with how do you, look to exit, right? If you're only owning a portion of a piece of real estate and you want to exit, what does that look like, right? So I think that there's logistical issues around real estate as well as kind of, I think, interest issues, right? I do think that there are other assets that are much more appealing to people, and that, I think that real estate is also something that people are starting to have very different views around, right? And you're seeing that because of the difficulties of getting into the housing markets and the housing ladders. I think that people are looking for things that are more accessible to them, right? So I agree. Real estate seemed like that was going to be kind of a slam dunk first pass. Now what we're really seeing is it's much more the efficiencies around real estate that people think there's opportunities in, like moving titles and moving land grants and things onto blockchain based rails rather than tokenizing the actual investments in real estate.
The other thing that, we're certainly pushing towards at Real Vision, and I think will happen, is like this whole market of hedge funds, which is basically investing in people who have excess talent in managing money in whatever markets. And what we're seeing is that you can basically prove somebody's abilities in a community. And then if they tokenize it, I can tokenize Sandy's trading portfolio. Right now, Sandy's a hedge fund manager and gets paid, which is incredibly disruptive considering the hedge fund industry is a $4 trillion industry, and suddenly everybody can essentially become a hedge fund manager. And that, again, puts the power back into the people as opposed to these lumpy, complicated corporate structures to make it super easy.
Well, and you and I, right, we both have hedge fund backgrounds. And so really, what is a pod structure for a hedge fund, but a platform? It's really just a platform play. And if that platform becomes something that you can offer out in general, right, there's a huge opportunity in that. I will say, though, the one piece that I do think about, because as you're exactly right, you can find all sorts of opportunity and anyone could really become, in part, a hedge fund manager. One of the things that do make these platforms very successful is the way that they allocate capital at the top level from a risk perspective. And that is probably where hedge funds, the future of hedge funds may lay. They may lay in that risk management layer that sits on top, and then all the talent that feeds the hedge funds could become almost open source.
Sandy, it's all going to be AI. The asset allocation. So if there's a basket of 1,000 traders available and you train your AI on it and say, okay, this is the kind of risk profile. Can you build me a portfolio of everybody can become a platform. And we don't need Izzy Englander to be worth $100 billion or $200 billion to do it, because it can be done by AI for almost zero cost.
Yeah, but then there's going to be, maybe Izzy Englander can build a better AI, right? than someone who hasn't really had that experience. And then the hedge fund becomes the strength of their AI algorithm, and that becomes the platform, right? But I think your point is perfectly taken. I think that, though, there is skill, right? We know that there is amazing skill in being able to invest, and that skill is becoming increasingly decentralized, and we can be sourced very differently. But in the end, there still needs to be skill that builds these algorithms and trains these algorithms to really be able to do this. And just like people are better or worse at it, my guess is that algorithms are going to be better or worse at it as well.
So the other side of this whole equation, we've kind of talked about moving this industry on chain. But what about moving the assets into crypto? Where are we with that? Because you're also involved in that whole thing as well. So where are you with all of that, with seeing what kind of demand is coming, what kind of products are needed? What's happening with the institutional investment with crypto?
Yeah, so I think institutions are investing in crypto. I think that this is one of the reasons that, some of the trading patterns feel very different now than in other cycles, because institutions are investing and institutions wait for market dips to buy, right? Institutions don't typically chase markets higher. And so you get this pattern of kind of higher lows, but not always necessarily big breakouts. And so I think that, in the altcoins, sometimes that volatility gets a little bigger because they can kind of wait for their entry points.
And they're less involved with alts as well.
That's right. And then I think in Bitcoin, right, which is probably the most liquid, you're seeing that, this pattern of higher lows keeps happening, and that will eventually create the foundation for, a move higher. But institutions don't drive markets higher in the same way that retail participation does. So I think you're already starting to feel the impact of institutions in the crypto markets, right? So as I become more successful, there's more demand for my tokens and more need to use those tokens to actually feed the transactional volumes that we're creating. But we also are using those same tokens as the investment vehicle into those platforms. So the hope is that the value of the token goes up because we want it to be an investment exposure. But in reality, the value of that token should go down as the volume grows because it's helping to drive volume.
Yeah,
so
it's really hard, this thing, because the more successful it is, the least attractive the block space is because of pricing.
Yes.
So it makes it really difficult. It'd be interesting to see how that resolves over time.
With Bitcoin's market share falling below 61.5%, it looks like it has already reached its peak. Now, altcoins are starting to get more attention. Raoul Pal thinks that the current drop is not a sign of weakness, but rather a short-term slowdown. Break in the market's momentum as retail investors lose interest for a short time, before the market begins its next strong leg higher. He thinks that this quiet period is just the market taking a break before making the next big move. At the same time, Pal points to a very important event happening in the Middle East. During his recent trips to Abu Dhabi, Dubai, and Qatar, he saw that sovereign wealth funds and government institutions all had the same clear message: put AI and blockchain technologies ahead of everything else. These countries are getting ready to be world leaders in the new exponential era. They have huge amounts of energy resources, big and quickly growing youth populations, and huge amounts of sovereign capital ready to be used. These two factors, the rise of altcoins in the market and the speeding up of technology in the Middle East with the help of the government, indicate that we are on the verge of something much bigger than a normal market cycle.
Right. So I think that we might have to just like separate out the two, right? Why can't you have an investment token and a utility token?
Well, I guess that's
right?
what
And
Base versus Ethereum is, right? You can't actually invest in Base or layer twos in general. So ETH was so successful that it became too slow, too expensive. So they had to scale the layer twos to allow high volume transactions at low fees.
yeah. And so, that's one solution, but maybe another solution is someone like an ETH issues a utility token to buy block space and an investment token to reflect the value of the overall blockchain and its treasury, right? And then if it's an investment token, then you can also start to distribute profits from it on community votes, right? And so that becomes even more attractive as an investment instrument. And so, this whole use of tokens as an investment exposure is new. It's really only at best 15 years old. And so I think that we're still also needing to, evolve and think through some of the implications to get the whole ecosystem growing, right? Not every token is necessarily suitable as an investment token, and maybe we need to think about new options there.
One of the things interesting, I didn't think this would be the case, but we got equity wrapped crypto before we got crypto wrapped equities.
Well, we got crypto wrapped ETFs, so maybe that did come first. But yes, you're right. We did not get crypto wrapped equity.
No, we got the other way around. You know what I mean? Because we actually wrapped a bunch of crypto in an ETF to make it accessible that way around, which is not the way most people would have thought it would have happened. It was like more disruptive than that. It was actually TradFi saying, well, we like it, but we don't want to change yet. So we're going to stick with the ETF side. Do you think that at some point, I guess you're seeing this, is a lot of the time you're still having to turn into a fund structure, crypto investments for clients, whether it's the hedge funds that you have internally or whatever it is, or you have to turn it into an equity. Are you yet seeing them saying, how do we do tokens and buy tokens and hold tokens?
Only in venture, right? That's really the only place that I think we're seeing, how do I buy and hold tokens, right? It's very hard right now to get investors' heads around holding the direct tokens. I'm talking institutional investors now. I'm not talking individual investors. But I think that institutions are still not clear on the tokenomics and how they work. I think they're still not clear, or I think that they realize that there's not a lot of clarity and transparency in some protocols in terms of what their tokenomics are and how they operate. And I think that makes it more challenging, right? Not only do you have all the business dynamics that you need to model to determine the attractiveness of an investment, you also need to model these new things called token pools that there's not a lot of legal clarity around what the obligations are there. And sometimes there's not even a lot of clarity around the plans of the issuer themselves on how they're going to deal with the token pool. And then there's the whole community aspect, which they've never had to deal with in an investment before. So I think that it's still a challenge to get these institutions to understand the tokens. What we try and do through our education role is really help them to understand that there has been a reliance on open source protocols in our society for decades now, but we were never able to invest in those protocols. And that if you can get their mind around this idea that a token is not an equity, but a token is a way of sharing ownership of open source code, that starts to help, but that's a big leap for a lot of
And the
traditional
VC
investors.
team might get it again, but the general portfolio managers are like, oh, this sounds like too much like early stage technology investing.
Exactly. So I think that we'll get there, but it's much more of an educational hurdle than putting an equity into a crypto wrapper or putting crypto into an ETF, right? Those are still things that are easier for people, I think, to understand.
I think another thing that I envisage happening pretty fast is the massive pools of excess capital, the Apollos and the Blackstones and those people to enter the DeFi market in size as providers of liquidity. It's all they do anyway, right? They're massive lenders of money, credit to the system. And it feels that this is a market they'll understand very well. Sure, there's some esoteric risks, but they're used to dealing with esoteric risks too. And that we'll see, there's trillions of dollars in that market can easily go into DeFi and create enormous liquidity pools.
A Bitcoin whale from the early Satoshi era quickly came back to life, putting more than $1.1 billion worth of BTC into circulation. This is a big event in the crypto world. This wallet, which dates back to 2011, hadn't been used for more than 10 years until July 15th and 18th, when it made two huge moves of 80,000 Bitcoin, which is worth about $9.7 billion. The coins were sent to Galaxy Digital first, and then they were sent to big platforms like Binance, Coinbase, and OKX. Some experts are worried that these big moves could lead to a sharp correction because of how big they are. But blockchain data shows that the process is being done in a smart way, by mixing over-the-counter trades with sales on an exchange to keep the market from being too disrupted. With about 12,000 BTC still to sell, there seems to be enough liquidity to handle the selling pressure so far. Experts say that this event doesn't necessarily mean that people are feeling pessimistic. Instead, it could mean that legacy coins are naturally being transferred to new owners, especially institutions with longer-term goals. More and more people think that Bitcoin's standard for year halving cycle is losing its power as bigger players with bigger reserves and better plans take over the supply dynamics. In reality, the market may be changing from cycles that are driven by retail sales to ones that are shaped more by institutional control and longer-term planning. Now, the most important question is whether this change makes Bitcoin more stable in the long term or lessens the power of past price explosions. What do you think?